just pull out $100,000 of equity from that property and allocate it to Bitcoin at 29% compound annual growth rate over the same 20 years, the Bitcoin value surpasses the property value at year 12 and ends up at 12.6 million for a combined value of 15.3 million. You now took one rental property, again, that was going to be worth 2.7 million at the end of 20 years. But by allocating a little bit of Bitcoin for that time, you turned the property that was going to be worth 2.7 million into a combined real estate Bitcoin value of 15.3 million. If they then allocate that $100,000 equity that they've pulled out of that property to Bitcoin, the numbers go bonkers over the next 20 years. Because if we take $100,000 now, listen to this, the $100,000 from the $750,000 property, the $100,000 over the next 20 years turns into $12.6 million. The property at 750,000 appreciating at 7% turns into 2.7. So I just want to recap. You had a property, and if you did nothing with it and just kept it for 20 years, the $750,000 property at the end of 20 years would be worth 2.7. But if you just pull out $100,000 of equity from that property and allocate it to Bitcoin, at 29% compound annual growth rate over the same 20 years, the Bitcoin value surpasses the property value at year 12.
Looking to buy Bitcoin the right way? Enable your independence with Bitcoin Well, the fastest and safest way to buy Bitcoin on-chain or via the Lightning Network in Canada and the USA. Head to bitcoinwell.com/BTC sessions and sign up today.